Welcome to the Capital News. I am your host, Alex Karitis. Today is Monday, May 4th, 2020. Thank you so much for joining me. The title of today's podcast is The Real Economy. This is going to be pretty much off of a couple of programs that I watched yesterday evening. One was 60 Minutes on CBS. The other was a Fox News virtual town hall of the president, the vice president, and the Treasury Secretary. It was pretty much all Donald Trump, of course, but there were some comments made from the Vice President and the Treasury Secretary, so we'll get to that. But both of these programs, I think, were really the purpose of highlighting some of the real costs associated with COVID-19, the health crisis, the economic fallout, and all of this, and how this country is going to sort of navigate these waters that we have really never traversed before. This has a real effect. We talk about this. This is one of the main purposes of this podcast. Prior to the onset of COVID-19, again, COVID-19 is the pin that pricked the everything bubble. Okay? This system, and I don't just mean here in the United States, the global economy, the global system, is and was extremely fragile. COVID-19, this global pandemic, is just speeding everything up. It is just exacerbating the problems that have existed. I outlined many of these problems in my letter to my congressmen, to my senators, that you can find on thecapitalnews.com. Representation and recourse. So many issues began so far in advance of COVID-19, it's not even funny. But as outlined in that letter, Representation and Recourse, I noted that politicians, central banks around the world were going to use this pandemic as a very timely and convenient excuse to justify the unjustifiable. And that is exactly what we have been witnessing over the past few months. And I believe in some instances it's only going to get worse. All right, so I want to highlight some of those things from the CBS 60 Minutes program. The unemployed, farmers, and then rural towns, and how you have these rural hospitals out there that are already on their last leg to begin with. Can they manage any type of outbreak in those towns? Extremely important question. A lot of things that were brought up during the Fox News virtual town hall were tariffs, China, COVID-19, and again, farmers and agriculture. So we're going to talk about those things. We have Larry Kudlow, economic advisor to the president, out there saying that there's likely going to be a third round of the payment protection program. All right? Third round. Just last week, Larry was out there saying, I think a lot of this cash, a lot of this stimulus, I think it's really going to start taking a back seat. We're going to start slowing it down. Then, of course, he's out there now saying, no, there's likely going to be a third round just of this program. Again, folks, we've been saying it here for weeks. This is just getting started. This is just the tip of the iceberg. What else did we learn today? Nearly $3 trillion, $2.999 trillion in U.S. borrowing is going to take place during this quarter, the second quarter of 2020. $3 trillion just for the second quarter. It's just getting started. Don't you understand what is taking place right in front of you? $3 trillion. Little context, little perspective. All the taxes we bring in at the federal level is about $3.5 trillion over the course of 12 months. Over the course of 3 months, we're going to borrow $3 trillion. Who's going to buy it? Well, we have a pretty good understanding. We had a pretty good guess as to who's going to be buying it up, or at least the majority of it, don't we? Say it with me, the Federal Reserve. For all intents and purposes, this is debt monetization. This is a banana republic. Nobody else wants it. This is even according to Goldman Sachs. And again, somebody is always going to be in agreement with Goldman Sachs because Goldman Sachs is on every side of the trade, right? So at some point you're going to agree with them. Every time you say, okay. So, but with this analysis from Goldman Sachs, I happen to agree with it. That the majority of this new issuance from the federal government is going to be purchased by the Federal Reserve. Okay? And again, according to Goldman Sachs, it's going to be anywhere from 60 to 70%. All right, so that's $2 trillion of the $3 trillion that's going to be thrown out there. How is that remaining $1 trillion going to be divvied up? Well, probably primarily through money markets. Through money markets, because we know foreigners don't want it. A lot of investors, personal investors, don't want it. Pensions don't want it. A lot of insurance companies are even shying away from them now. And if it was not for the Federal Reserve, these U.S. Treasuries would be junk. Interest rates, the market would be pulling these rates much, much higher. I mean, if you remove what the Federal Reserve has done over the past couple of months with the expansion of their balance sheet, which we talked about here in depth over the past few podcasts, and even did a capital economics presentation. If you remove that, where do you think interest rates would be? And where do you think the stock market would be if it wasn't for this massive amount of money printing and expansion of their balance sheet? Do you think it would up at these levels on the stock market? Do you think interest rates would still be this low? Complete manipulation, a complete fraud, and completely flawed economic and financial policy. We know this because they've been doing it for the past decade, and this is where we are. This is where it took us. A pinprick for the everything bubble. And now we do not have, which is par for the course, just to maintain the status quo. Not to have magnificent infrastructure. Now, of course, that's probably going to become phase 4, 5, or 6 as we make our way down there. And, of course, it's going to be talked about. Of course, it's going to be talked about is great, but it's probably not going to happen, unfortunately, because it gets abandoned time and time again. Those shovel-ready projects are not shovel-ready. Education system continues to crumble. Endless wars continue to be endless. We rattle off the list here all the time. There's going to be all this money, but nothing to show for it. Tens of millions losing their job, people starving to death. Nothing to show for it. But we're going to borrow $3 trillion just in the second quarter alone. National deficit that's likely to hit $4 trillion. That's according to watchdog groups. That's according to the Congressional Budget Office, a nonpartisan institution. So what do you need to see? How much more do you need to hear? That this is a financial and economic coup d'etat in our faces, because we know what they're buying with it. We know where the money's going. A lot of it anyway, at least in theory. Specifically, we can figure some of it out, obviously, but there's not a lot of oversight. So where is a lot of that extra stuff going? God only knows if we'll ever find that information out. So more stimulus is coming. $3 trillion in borrowing just for the second quarter. Market performance, I didn't watch a lot of the markets actually today, but I do know futures were down over Sunday evening, and the markets were pretty much trading in the red all day until, of course, the end of the day, and they pretty much all made it into the green. But right now we have the futures trading. The Dow Jones and the S&P are both up about 0.4%. The NASDAQ 100 is trading up about 0.6%. Across the pond in Europe, they got decimated, down 3-4%, depending on the index, although the FTSE 100, the UK markets, were relatively flat. Australia is up right now about 1.4%. The Reserve Bank of Australia is set to have a policy announcement shortly, so they are, I guess, anticipating some sort of stimulus. I'm not 100% certain, or at least holding steady. So we'll keep you updated if that comes across the wires. However, the Australians, they're doing the same thing as we Americans are doing, and everybody else for that matter. It doesn't matter what the economic data is, we're just going to continue to rally. Australian services PMI falls to a fresh low. Services is now at 19.5 in the month of April, down from 38.5 in the month of March. Again, anything above 50 is expansion, anything below 50 is contraction. 19.5 in Australia for services. They don't care, up 1.4%. Fantastic. Crude oil, we have WTI trading at $21.86 a barrel. Brent, the international metric, $28.37 a barrel. Natural gas has regained that $2 mark, is now trading at $2.10 per million British thermal units. Gold and silver relatively unchanged. Gold at $1,698 an ounce. Silver at $14.80 an ounce. On the bond front, 10-year U.S. Treasury note yielding 0.63%. This has been in a tight trading range for quite a while, so it's going to be interesting to see how well the Federal Reserve can maintain control over the yield curve. Time will tell. So that's some of the market performance. Getting to this 60 Minutes segment yesterday with the unemployed, it really just paints that vivid picture when you're actually talking to regular, everyday Americans. You know, entrepreneurs. In one case, they had a businesswoman who was a caterer who has pretty much had to close her doors. Fortunately, she is married and her husband also works. I believe it was in home health care, but her doors are pretty much shut. She has no idea when her clients are going to call her back. And even if they do, when are those events going to take place? And if those events take place, how many people are you going to have? So these are real questions. This is not any type of pent-up demand, right? I mean, this woman, she started it herself. Had a handful of employees. Had to let them go. Had to let go a family member who was her right-hand woman, she said. This takes a very personal toll on people, understandably so. What did Harry Truman say? If your neighbor loses your job, it's a recession. If you lose your job, it's a depression. There are a lot of effects that take place downstream when people lose their jobs, especially when so many Americans unfortunately live paycheck to paycheck and use credit cards to make ends meet. When a significant portion of the people in this country do not have $400 in the event of an emergency. $400. Couldn't come up with it. And now you hit this. Shut down the economy, do all this stuff for a month and a half, 2 months, and who knows how much longer it's going to go. These are economic changes. These are social, behavioral changes. This is a big ship. The global economy, the U.S. economy, a $21 trillion economy. That's a big boat. It's not nimble. It takes a long time to shut those engines off. It takes a long time to turn them back on and get them going. And to turn it and to move it. It's a big boat. So many jobs are not going to come back. Period. End of story. I take no pleasure in saying that, but these jobs are not going to bounce back because so many of them were based off of a lie to begin with. This was not the greatest economy ever. This was a continuation of a massive bubble that got even bigger because of massive tax cuts that went primarily to the upper echelons of the income bracket and to corporations, which caused massive deficits, trillion-dollar deficits, may I remind you, ladies and gentlemen, before COVID-19. This just makes it worse. An increase in government spending. I'm all for tax cuts. Those of you who've been with me understand this. I want the income tax abolished. I want the Federal Reserve abolished. But if you're going to do it, you have to do it sensibly. You also have to cut spending. Otherwise, you're shooting yourself in the foot. Putting more money maybe in your right pocket just to take it out of your left pocket later on. That makes no sense, but that's what we continue to do. Time after time after time. Stupidity. And we're all going to have to pay for it. And unfortunately, some are going to have to pay a bigger price. So you got to feel for a lot of these people. You have people, they're talking to many other people on the program, 60 Minutes. A lot of people who are, a little bit older. Some people who've never been unemployed in their entire life. Now they face unemployment for the first time later in their career. How easy is it going to be for them to find a job after the economy, quote unquote, reopens? Will they be able to? Will it be for the same amount of pay? Will they have to take a job that they're overqualified for? There were a lot of people that were interviewed by 60 Minutes, people applying to many positions that they were overqualified for. Why? Because they need something. Because so many people live paycheck to paycheck. This is the real economy. If this was the greatest economy ever before this would not be the case. Period. Would not be the case. Because while a lot of people aren't that good with managing money, it's not 100% of the country. There's a lot of blame to go around. Corporations, government, individuals, central banks. Ton of blame to go around. That's why I'm against all these bailouts. Because nobody's innocent in this. So just stop it. Stop the game. Stop the system. But they can't. They can't. Because those who pull the strings, the game would be over. It would be revealed that this country, and it's not just this country, this system, this economy, this government is a Ponzi scheme. One massive Ponzi scheme. Ripe with fraud through its core. We've discussed this before. Bernie Madoff and his Ponzi scheme only came to a close because of the great financial crisis, because he doesn't have a printing press. But Uncle Sam does, doesn't he? So Social Security can continue to run insolvent. That's fine. No problem. The federal government can continue to run insolvent. That's fine, no problem, because they have a printing press. And they can bail out their buddies. Unfortunately, Bernie Madoff didn't have a printing press for him. And people wanted their money because they needed it, because it was a great financial crisis. And Bernie didn't have the money. Because that's the nature of a Ponzi scheme. Well, guess what, ladies and gentlemen? We're about to borrow $3 trillion. You know why? Because we don't have the money. And now we have to print it like a banana republic for stuff that is just filling a hole that's getting deeper and wider as we speak. There's no honesty. There's no leadership. There's nothing. There's finger pointing. There's blame. The only thing that these politicians can get together and agree upon is spending more money, because it's politically convenient for them to do so, because it kicks the can down the road. And unfortunately, the real economy, real Americans have to pay the price. There is no free lunch. Free was never so expensive. We haven't even gotten to the other side of this coin yet, which, if I'm right, is going to be devastating. The rural towns, the hospitals, getting overwhelmed. So many of them are on their last legs to begin with. They're out of personal protection equipment. They were highlighting and interviewing, I believe it was a physician's assistant or a nurse practitioner, I think it was, who's basically making house calls. Because she has to, and she feels she believes she's going to be completely overwhelmed. She's tapping into her retirement to help take care of people. I mean, God bless her. But this is what's taking place around this country. All because we've been shut down for a few weeks. That ain't solid. That's not a strong foundation. People can't make it. Small businesses, another interesting survey. About 40% of small businesses completely skipped rent last month. 40% completely skipped rent. How much longer is this going to continue? Even if you open up, it's not going to be any type of saving grace. The behavioral changes, it is going to take a while. The changes in local laws, at least temporarily, which we've highlighted here before, theoretically at least, which we're starting to see play out. Georgia, Texas, we're starting to see some of these changes because of the social distancing and a whole host of other issues. Can't have this many people here. Can't have that many people there. Yes, this can be open, but we can't have big events. Well, that's going to be continuing to be devastating to so many industries and to so many people. That's the real economy. And again, 60 Minutes talked to some farmers. You have grown men on there crying because of the suicides that are taking place. Their family, their friends, their neighbors, their fellow farmers, through no fault of their own, because of the trade wars and because of this, COVID-19. So, and these are primarily the smaller farms, obviously, the family farms. And it hits home. It hits home. Because the gentleman made a great point. Why so many people feel depressed to the point where they end up killing themselves. Because you have these family farms that have been in the family for generations. And now it comes to you, young man, and it's failing. And you're not going to be able to keep it going. All of that history, that legacy, it's how people think, came collapsing down on their watch. And they take their own lives. This is the real economy. This is what is taking place. Because this is in stark contrast to what took place during the virtual Fox News town hall with the president. Because he's saying, oh, this is the greatest time to be a farmer because we're taxing the Chinese, are paying us so much money. It's a great time to be a farmer. Because we're giving them money. 10 billion here, 13 billion there. We have so much left over, we're going to give them another 10 billion, 19 billion coming up soon. We're broke. We're borrowing $3 trillion for the second quarter alone. What money is he talking about that doesn't exist to begin with? That's not how it works. You want to know why it doesn't work like that? Even in front of him, one of the questions from a fellow American, not the news anchors, because this was a virtual town hall, small businessman asked the president, are you going to remove the tariffs because I have additional costs because of them? And I would rather put that money to work in hiring new people, training new people, investing in my business, getting new equipment, etc., etc. Even in the face of this reality of an entrepreneur having to pay higher prices because of the tariffs, he continues down his line that we're not paying for it, that the Chinese are somehow writing us checks and putting it in the U.S. Treasury. That's not taking place with these tariffs. That's not how they work. Because the Chinese have slapped tariffs on us. Are we writing checks and sending them to the Chinese Treasury? No, because that's not how it works. This upsets me because this is real. That's why I've been on top of this and so upset for the past, 18 months. I mean, this podcast has been on since last February, so not quite that long here. But with all of these trade negotiations, the fake headlines, everything's fine. No, it isn't. You get a phase one trade deal, it takes you back to where we were 2 years ago before the whole ruckus started. And that assumes the Chinese make good on it, which is highly dubious to begin with. Oh, it's a great time to be a farmer. We're bringing in so much money, we're broke. Our states are broke. Which was another question that came up when Mike Pence and the Treasury Secretary Steven Mnuchin were there as well. Once again, about bailing out the states. And Steven Mnuchin says, well, I don't think it's good to be rewarding or bailing out states that squandered their finances before COVID-19. Really, Steve? Really? But I guess it's perfectly fine to give $50 billion to airlines who squandered their billions of dollars in cash flow, in profits, and in debt with very low interest rates. No, it's not their fault that they squandered their stuff. But the states, well, they can go to hell. They can file bankruptcy. Screw them. Again, folks, I don't want anybody getting bailed out. I don't want the corporations getting bailed out. I don't want the states getting bailed out. I'm even against giving money to the individual, which probably isn't going to make me too many friends. But if you're going to give money to anybody, give it to the people. This is ridiculous. And of course, he isn't pressed on this by the Fox News hosts because that's the name of the game. They're not going to ask any serious, tough questions because they want the ratings. They want these guys to come back. And if you put them in a corner and ask them a really tough question, like what we just outlined right there, very simple. Why is it okay to bail out them because they spent all this money on share buybacks that artificially increased their share price so the executives could get paid handsomely? Couldn't they have saved that money? Couldn't they have put that in a rainy day fund? Couldn't they have done something better? So why should the American people be bailing them out, yet you're going to complain about the states needing bailed out? Can you square that circle for us, Mr. Secretary? Can't even ask that question. Can't even ask it. And now, of course, we're going to get into phase 4, phase 5, and one of the stipulations, I guess, at least according to the president, nothing else is going to come through unless we get that payroll tax holiday. Again, we talked about this last week, I believe it was, with Art Laffer, and that ridiculousness. Again, I'm fine with these tax cuts, but you have to cut the spending. There is not going to be any spending cuts. None. This is going to drive the deficit up bigger. Payroll taxes cover Social Security. So now, Social Security is one of the biggest drivers of our debt and thus our deficits. So come on, guys. 1 + 1, connect the dots. This is not difficult stuff. All for the short term. Nothing long term here, all for the short term. It's not how it works. It's not how it works. So it'll be interesting to see if they get that payroll tax cut, if that's what comes down the pike. You go, well, okay, we need to get the payroll tax cuts. Then the Democrats will come over, well, if we're going to do that, then we're going to give you the state bailouts, and then we got to do the infrastructure, There's going to be another $2-3 trillion before you know it. And again, we don't have it. But that's not a problem because evidently deficits and debts do not matter. They do not matter for the government. They do not matter for the central banks. That's what the chairman of the Federal Reserve told us last week. So what, are we adopting modern monetary policy here? Is that what's going on? Just print, just spend. Deficits don't matter. Well, then why are you talking about taxing us here and there? I mean, come on. Got to feel bad for so many people in this country. 30 million Americans unemployed over the past 6 weeks alone. That does not take into consideration the many, many others who were unemployed before that, and the many who are not even counted because they are completely discouraged. And if you're a discouraged worker who is no longer looking for work, you're completely off the radar. You're not counted anymore. You are not counted. And how many people does that take into consideration? A lot of social issues are going to continue to pop up because of this. You're going to have unfortunately, you're going to have these suicides. You're going to have crime potentially increase, which we're already seeing when it comes to domestic abuse. Other crime in some other areas has obviously gone down because nobody's out and about. So those things have gone down. Opioid crisis. This is what we've been witnessing. The opioid crisis epidemic over the past decade. This is just a continuation. These things are only going to get worse, at least in the short term. And again, I take no pleasure in saying this. These are just the real world effects of what happens when we live beyond our means. And to think that we are somehow going to have a V-shaped recovery in this economy, to me, is ludicrous and ridiculous on its face. You are not going to recover from generations, plural, of poor economic and political policy that has led to us living well beyond our means, and to think that that's just going to all go away in a couple of months. Well, the stock market went down 30%, now it's correcting. GDP went down 5% in the first quarter, maybe 20, 30, maybe 40% in the second quarter. So the third quarter is going to be boomtown. Fourth quarter is going to be boomtown. And because we're spending and printing so much money, we are setting the fantastic stage for phenomenal growth in the year 2021. That's what we're told by the president, the vice president, and the secretary of the Treasury. Do you believe it? I don't. And this audience shouldn't either if you've been paying attention. Because we don't just look at the headlines. We lift up the hood. We look at the real data. We do our analysis. We talk about it on this podcast. We do the capital economics presentations. You can see this insanity for yourself. You don't have to take my word for it. I give you my sources. I cite the stuff on those capital economics presentations. You can easily find it. If you think I'm manipulating the numbers, fixing it to fit my thesis, that's not what I do, because I don't have to fix anything to prove that these people are stupid. They do that all by themselves. They're insanity. They do that all by themselves. I don't have to nudge them, encourage them, positive reinforcement. I don't got to do a thing. Kick back in my lazy boy and just let them do it. It's automatic. United States, Europe, Asia, whatever central bank, it makes no difference. They're all the same cloth. That's why there's virtually no escape for anybody, unfortunately, on this planet until there is a massive deleveraging. Which, again, we've had these arguments back and forth between the deflationary effects, the inflationary effects. And again, this audience understands you can have both. It depends on the good. It depends on the service. And again, I go back to the basket of goods because I ultimately think inflation, stagflation, and potentially hyperinflation is what's going to end up being the case. This is a process. It could take a year, a couple of years, a few years. But that, to me, is going to be the process. You have a basket of goods. I'm concerned about what is in that basket of goods that you are actually purchasing, not just the entire basket. Because if you have prices going down in a certain sector for a certain good or certain service, and those prices just keep falling because nobody's buying them, then what do I care what the price is? It makes no difference. But if you're spending an astronomical amount more on your everyday expenses, on your cost of living, that's what I'm concerned about. If your food bill goes way up, that's what I'm concerned about. If your utility bill goes way up, that's what I'm concerned about. Your rent, that's what I'm concerned about. I don't care about an iPhone, a refrigerator. I don't care about that crap. Because if nobody's buying those things, then what do I care what the price is? I'm more concerned about what it is that you are buying and how much of your income is that eating up. That's the real effect. Because we already know about the supply chain disruptions. Those are taking place. They are going to continue. God forbid we get a second wave, although that's most likely going to happen with COVID-19. It's just going to be another loop-de-loop. Hopefully it's not as bad. That's why it's going to take a while. It's already May. I remember doing a podcast back in January, and I said, it's only January. It's already May. I almost remember doing that podcast like it was yesterday. The list of things we were running through and saying, well, this is only January of 2020. Now it's May already, in the second quarter. A new season. And the things that we are dealing with are going to have to continue to deal with. And don't forget, this is 2020. This is a presidential election, too. We got that only 6 months away. Real people are suffering. 30 million unemployed over the past 6 weeks. More stimulus coming. $3 trillion that's going to be borrowed just in the second quarter alone. Tip of the iceberg. Federal Reserve is out of control. Federal government is out of control. The only thing politicians and the president can agree on is spending more money that we don't have. Solve that riddle. And round we go. But don't worry. You're going to get your $1,200, maybe. Because unfortunately, some of these people on that 60 Minutes program, they don't even have their checks yet. Sit down and shut up. Pay no attention to what we're doing right in front of you. Here's your check. Sit down and shut up. That's what we've come to. But these are the real effects. We're going to continue to monitor them. And round we go. And just lastly, before I sign off here, I did have the flash headline come across. The Reserve Bank of Australia held rates steady. And it looks like the Australian stock market is pretty much unchanged from that level, about 1.3% up. So that's it. The Reserve Bank of Australia held rates steady. We'll see what happens next time, and I will catch you here tomorrow. Thank you so much for joining me. Please like, share, subscribe, get the word out, leave your comments. We do love hearing from you. Stay diversified, stay vigilant, and stay with the Capital News. I am Alex Kreitis. Godspeed.